Hey YouTubers, good afternoon, good evening. God, it's hot in here, so I'm wearing a light shirt here, so don't panic. So let's go over Better Dwelling's cheat sheet of their top stories for the week. Now, I want to cover this because all these stories are bang on when it comes to what's happening in the housing market. So if you're watching this in California or you're watching this in Australia, take notes because it's coming to a city near you. Wherever it's happening everywhere because it's the same bizarre housing crisis everywhere else in the world is in right now, and record level low interest rates just destroyed, inflated so much hot air, foreign investing coming in and changing the fabric of cities completely, turning some of them completely into ghost cities. See what's happening in Sydney right now, jeez. And even downtown Vancouver. Unrecognizable from 10 years ago. This week's top stories: Canadian mortgage growth plummets as the credit breaks down and Toronto real estate inches lower. So let's look at this week's cheat sheets. Canadian real estate. Okay, Canadian mortgage growth plummets to the lowest since levels of 2001. I covered this in an earlier story, but I'll read a bit of it. Canadian mortgages growth is slowing and fast. The balance of mortgage credit and large lenders reached 1.5 trillion, up 5.06 billion. That sounds huge, but it's actually almost half the dollar volume increase the market saw last year. The annual rate of increase has now fallen 4.1%, the lowest it's been since May 2001. Worth also mentioning, in 2001, the Bank of Canada had to slash rates to save falling credit growth. 1 in 10 Canadians that bought real estate in 2017 borrowed over $600,000. Woo! Canadian real estate buyers were on borrowing spree last year, taking out huge loans. Mortgages over 600 large represented 13.6% of mortgage originations in the Q4 2017. That's a big jump, considering that only 11.4% of originations were above 600 large. In the same quarter, just 1 year before, remember that larger debt, the greater the chance of shock from interest rate hikes. Hello, people are severely over leveraged in Canada, especially with the medium income is. It's not stress testing Canadian real estate buyers. The credit cycle is breaking down. So I read this one too on Trends in the Housing Market on Wednesday. Stress testing is being blamed for slowing credit growth, but it appears to be more general trend. Outstanding mortgages stood at 1.5 trillion in June, up 4.1% from last year. Outstanding consumer credit reached 612.32 billion. That's consumer debt. That's what people are eating off of. See, people need to eat, right? They forget this, eh? When they're taking out all these debts and I could pay this back, but they forget that they need to actually eat every day to actually survive and live. Wow. So the 16.1232 billion in June of consumer credit that we're talking about, also up 4.1% from last year. Both types of credit saw growth. Cinch and taper lower, likely a result of higher interest rates. You don't say? That your local mega box chain is stressing testing blender and vacuum payments now. So they had a thing in the article that basically lots of blenders aren't selling and juice makers aren't selling anymore because people don't have credit to buy it. And that's how sad it's gotten here in Canada, folks. CMHC, Canadians over 55 are sitting on over $277 billion in real estate debt. Guys, people over 55 should be free and clear, out of debt, preparing for retirement. Nobody wants to head into retirement with debt, with massive amounts of debt. Let's see what they have to say about that. The CMHC debunked the myth that older homeowners are mortgage-free. Yeah, right. The majority of Canadians with mortgages are 57% and above the range of 45. Those over 55 with mortgages now represent $277 billion of total outstanding credit. Despite starting their homeowner journey earlier and cheaper prices, older Canadians are still carrying a lot of debt into their twilight years. And that is not a good thing, people. That is horrible. Toronto real estate. Toronto real estate prices slip lower, but the size of losses shrink. I'd read that article not even a couple hours ago. Toronto real estate saw slip a little lower in July. The Toronto Real Estate Board reported that composite benchmark price of $768,000 in July that represents a monthly decline of $3,700 from the month before, and annual decline of 0.59% in July. The annual decline is a slight improvement from 4.79% it was down the month before. Prices aren't falling as much as last year, but it's a bit of reach at this point to say the markets has recovered. Markets are far from recovering in Toronto. They went up way too fast. Same thing with Seattle, and same thing with what's happening in Portland, Oregon. Anyways, guys, that's the Canada housing update for what month are we? We're in July. What week are we? First week of August. Sorry, first week of August 2018. I want to thank everyone for joining in and tuning in and watching. Mike Martins here from the Mike Martins channel. And do yourselves a favor, don't go into a retirement into debt, because you're going to be eating, I don't know what you're going to be eating. I don't even want to know what you're going to be eating if you go into retirement with debt. You're supposed to have steak, buffets in Vegas, you're supposed to be traveling, enjoying your golden years, you know, not this debt cloud that a lot of people have fallen into. Anyways, Mike Martins here, Canada Housing Update. Comment below, let me know what you guys think.